Hey, what's up, stock compounders? Brad here. So, you guys haven't seen me for a little while. I've been really diving into Nick Sleep's Nomad Partnership letters, okay, from 2001 to 2014. Really prompted Pabrai to really shift around his whole investment framework. And so I've been digging in. It is awesome stuff. I'm excited to share a bunch that I'm learning from those letters. And I'm particularly excited to value Costco through the framework that Nick Sleep used to think about what Costco might be worth. So that's coming. But today we're going to talk about what are smart value investors buying in Corner of Berkshire and Fairfax. Okay, Corner of Berkshire and Fairfax is a membership website where you can create topics around all kinds of different things. There's one topic called "What Are You Buying Today?" Okay, it's a thread on Corner of Berkshire and Fairfax. Every week I've been going through and sharing what investors in there have said that they're buying. So this is from the last week. We have 17 different stocks here. Many of these have been in previous episodes of What Are Smart Value Investors Buying This Week. There's a few new entries, so I'll touch on those in a minute. For those of you who haven't seen this, and for those who have, just to drill in, what are some high-level filters that I use in my process to kind of narrow down what stocks I actually dive deeper into. There's three really big ones that I think are super important. The first one is insider ownership, okay? And I got this from Charlie Munger. Charlie Munger says, show me the incentive and I'll show you the outcome, okay? So what kind of skin in the game does the management team have in these companies? If management isn't willing to hold the stock of a company, why should I be willing to hold the stock of a company? So I like to see over 10% insider ownership. So if you got over 10%, you get a point, all right? And that goes in the score column. The next column is gurus, okay? This is super investors that are tracked by Data Roma. How many super investors own each of these companies? To me, that's an indication that a smart investor has looked at the business, kind of vetted it, decided to put real money on that bet. So that makes me more comfortable when I see that smart investors own this thing before I decide to take the plunge. So you can see how many guru investors, again, tracked by Data Roma, own each of these. If there's at least one guru investor, you get another point. It goes into the score column. Third one, Value Investors Club, VIC. Okay, we're going to take a look at Value Investors Club for a few of these. But it's a place created by Joel Greenblatt where smart investors can do a thesis of a company, submit it. There's a panel that looks at it to see which ones are strong enough to accept into the club. And then we get to read them, okay, which is awesome. And what I have here is when was the most recent VIC write-up done for each of these companies. If there was one done within the last 2 years, you get another point. So you see 4 of these got all 3. Okay, insider ownership above 10, at least one guru owns it, and there was a recent write-up in Value Investors Club. So that's awesome. I love to see that. Acquirer's Multiple. Now, this is a book written by Tobias Carlyle, and the acquirer's multiple is really a measure of how cheap a business is. It's simply enterprise value divided by the last 12 months of operating income, okay? Earnings before interest and taxes. So, the lower this number is, the cheaper the company. The lowest one here is 12, okay? That's pretty strong for Vontier, all right? Vontier is a recent spin-off. Could be interesting to look at based on how cheap it is. I don't have revenue growth or 10-year compound annual growth rate data for that because there's just not much of a history with it. I think it's a spin-off within the last 12 months. So next column, revenue growth. This is my measure of growth, right? How quickly is a company growing? Which is obviously a very large part of determining what that company is worth. So you've got cheap, what is it returning based on what you'd pay for the whole business from the last 12 months. And then revenue growth over the last 10 years. How quickly is it growing? This last one is a recent column that I'm including, 10-year compound annual growth rate. So if you had bought this company 10 years ago, how would you have done over the last 10 years by owning that business? And that's this number here. Now, most of these don't have 10 years of history. Some of them do, but they're more turnaround plays. So the 10-year CAGR isn't necessarily relevant. But, when a company has done, I like to see 15% or higher over the last 10 years. That could indicate that it's got that long-term compounder DNA. So companies like NVR, or I don't even know how to pronounce this one. This one's out of Denmark, industrial conglomerate in Denmark, or Pure Cycle Corp out of Denver, Colorado. Those are strong 10-year performances. Okay, I like to see that. Now NVR, almost 18 billion market cap. At some point, it's tough to rely on a high compound annual growth rate to continue. You tend to run into size issues where you can't grow as fast as you get bigger. I mean, it's one of the main reasons Berkshire hasn't performed nearly as well in the last decade or two as it did 4 or 5 decades ago. There's just so much more capital to have to find ideas for. And obviously, as you get bigger and bigger, you can only look at bigger and bigger investment opportunities. So it's a much narrower universe of stocks that Warren Buffett gets to choose from than what I get to choose from, which is awesome. So those are the columns. Let's take a look at who's in here. I'm not going to spend much time on who's been in here before. Berkshire Hathaway has been in here multiple times. Atlas Corp has been in here. This is the biggest holding of Fairfax Financial. No surprise there. I mean, this message board is corner of Berkshire and Fairfax. Okay, so a lot of Fairfax fans in this community. So that's Atlas Corp. Madison Square Garden Entertainment has been in here before. This could be an interesting play on the reopening, right? Post-pandemic. There's going to be a lot of people potentially who are going to want to go to these entertainment venues that are owned by Madison Square Garden Entertainment. So, and then the last one that has a perfect score of 3 is Brookfield Asset Management. Now, we haven't seen Brookfield in these series since the beginning of March, right? Since I've been doing this. So Brookfield Asset Management, let's take a quick look at what they hold, right? It's a holding company, a hedge fund run by Bruce Flatt. So let's take a look at what they own. BEP, this is Brookfield Renewable Partners. Huge part of the portfolio, 33%. BPY, that's probably another Brookfield, name there. Again, another Brookfield. EAF, GrafTech. Oof. It hurts me just to see EAF, GrafTech. I lost about $8,000 on GrafTech. Made a video about it a while ago if you guys are interested. But it looks like Brookfield has been selling off GrafTech. In the fourth quarter of 2020, they sold off 14% of GrafTech. So anyway, guys, if you want to see what Brookfield owns, hedge fund, It's got 82 billion under management, AUM. Now, it says here 69 billion. I had to convert it, all right? Brookfield is a Canadian company, so that was in Canadian dollars. This is US dollars, $69 billion real asset manager, okay? So those are the score 3 out of 3. Alibaba, we've seen many times in this series, so I won't get into that. This is actually the only one on here that I currently own, okay? Alibaba. Next one, NVR, home builder and mortgage banker in the US. Now, NVR has come up a number of times in my circles recently because Monish Pabrai has been talking about it as one of these incredible Uber cannibal businesses, okay? What does that mean? It means NVR has been buying back a lot of their own shares, okay? Retiring shares. So if you're an owner in NVR 20 years ago, because of the number of shares that NVR has bought back, you own a substantially bigger piece of that pie, even though you haven't put an extra dollar into that company. So buybacks are an interesting way to return value to shareholders. And NVR does buybacks religiously. I just wanted to show you guys what NVR has done over the last 10 years, okay? Nearly 22% compound annual growth rate. It's been a 7x, a 7-bagger over the last 10 years. And you can see the stock chart. It's, there's a few blips in here, but it's, a best fit line looks pretty good. It's got that sort of exponential growth curve happening. And a lot of the returns are from, this religion of buying back stock. So that's an interesting one. Let's see. And there's a pretty recent write-up from August of 2020 if you want to dig a little bit deeper into that one. Vontier has been in these series before. Like I said, recent spinoff. And again, seemingly quite cheap. So could be one to look at if you're knowledgeable about the field that Vontier operates in. Now the next one is a first time. Okay, just like Brookfield Asset Management. Haven't seen Alico Inc. before on the list. Agribusiness and land management company. Okay, so big citrus grower in Florida. We're actually going to take a peek at this one in a little bit in Value Investors Club. Look at this March 2020 write-up. And the reason we're looking at it is mainly it's small. I like to see companies that are under $500 million market cap. And there's a couple on this list that we're going to take a peek at in Value Investors Club. Next one, Topicus. Okay, this first came to my attention through Chris Meyer. He put out a blog post. It was like a Q&A about 100 baggers. And he revealed like 6 of his 11 holdings. One of them is Topicus. And I believe, I'm sure he knew about Topicus because he owns Constellation Software. Constellation Software has been one of the incredible 100 baggers over the last couple of decades. Recently, I think it's done like double every 2 years, which is a 35% compound annual growth rate. So Constellation Software has done incredibly. This is a spin-off of Constellation Software, really targeting software companies in Europe, okay, acquiring those types of companies. So it could be one to look at if software is in your wheelhouse. We don't have a lot of info about it because it's very new. I don't even think there's been a quarter that it's been public yet. So it'd be interesting to watch that one as it unfolds. I also believe Chuck Aker is buying Topicus from what you guys have sent me. from Bloomberg screenshots and whatnot. So thank you all for that, kind of inside, juicy info there. The next one we've seen a couple weeks ago, industrial conglomerate in Denmark. Again, 15% CAGR over the last 10 years. 13 acquires multiple, very reasonable and pretty good insider ownership. So I think this, the types of businesses that this company owns is quite broad ranging. So it's an interesting one. You'd have to have a pretty expansive circle of competence to understand each of the components of this company. The next one, Pure Cycle Corp. We've seen this one in the list before. Water and wastewater systems in Denver, Colorado area. Also land developer. So the idea there is build single-family properties and sell them the water, right? That's like the recurring revenue piece of this business. So we're going to take a peek at this one in Value Investors Club as well, right up just 5 months ago. So that's great. Next one, Attento. Okay, CRM, customer relationship management software and services out of Luxembourg. This is a wild one. So it's up 22 times in the last year. I just want to take a quick peek at this one, because that's insane. So if we look at the 3-year chart, I mean, this thing was up around $40 per share back in 2018, and it crashed hard. I mean, it got down to, like $4 a share. And now is that right? What's happening here? I wonder if there's something that's getting lost in translation, because when I looked, it had gotten down to $1. If we look at the VIC write-up, ATTO, from March 2020, $1.42. Okay, so maybe there was some kind of split or something with the stock. But according to this chart, it's up 5x in the last year. So anyway, we'll have to get to the bottom of that at some point. But so it's down a lot, and then it's about halfway back up or so. Pretty small, very small market cap. This is not in my wheelhouse, but if any of you know Salesforce really well, this might be one to look at. Yep, we'll leave it at that. Next one, Lytics. First time for Lytics in this series. I've seen Lytics before, haven't really dug into it. Advertising platform within the financial institutions, digital channels. I don't fully understand what this company does, to be honest. $3.5 billion market cap. What's really cool about this one, and it's true for Alibaba as well, not quite as recent, but with Lytics in Value Investors Club. I'll show you guys exactly what I'm talking about. Lytics. So there's a long thesis and a short thesis, okay? And they're very close in date, which is awesome. Because, if I'm thinking about investing in a business, I want to hear from very smart people what the bull case is. I also want to hear what the bear case is, okay? Every company has a bull case and a bear case. And the more I can understand about both sides from smart people, that's just a fantastic position to be in as an investor. So very cool that's happening with Lytics. And again, similar situation with Alibaba, but a little more dated there. So that's card Lytics. Again, it's a little large for me to be interested. Fairly impressive revenue growth, 20% per year over the last 10 years. Preferred apartment communities has been here multiple times in this list. Ownership and operation of Class A multifamily in Southeast U.S. I like the market cap. I don't like that none of these boxes are checked. So that's too bad. Hopefully we'll see a VIC write-up for preferred apartment communities soon. There is a little write-up in corner of Berkshire and Fairfax. If you search for APTS, there's a thread specifically for this investment idea. So check that out if you're interested. Again, Playboy Group, for the second time, makes the list. Was just taken public through a SPAC in February of this year. I like this. Pleasure and leisure lifestyle company. Wow. That's Playboy. Again, no real data to look at, no filings, because it did just IPO. IntelliCheck. All right, this is maybe the second smallest company I've seen in this series. Threat identification and identity authentication solutions out of New York. There's also a bit of a write-up in COBF for IntelliCheck. The person who initially proposed this idea, fully admits this is pretty speculative. It's kind of a long shot. So keep that in mind. And the last one, first time in this series here, Morguard REIT. Okay, Morguard North American Residential REIT. Acquisition of high-quality multi-suite residential properties. Now, I'm not sure exactly what multi-suite is. I don't know if that's condos or what that means. I feel like they're trying to dress it up a little bit by saying multi-suite. $500 million market cap. I like that. But it's hard to find much on it. So let's take a look at a few VIC write-ups. Let's look at Alico first. ALCO in Value Investors Club. So ALCO, this is it from March 2020. Okay, so we got our pandemic. I'm not going to use this word. Small cap investing checklist. Corporation will survive and is potentially favorably impacted by the pandemic. Check. Well-managed business with competent leadership. Check. No outside capital needs under any reasonable scenario. Check. Substantially undervalued on earnings and cash metrics. Check. Meaningfully undervalued on NAV, net asset value, or liquidation value. Check. Okay, so what is this company? It's an agribusiness focused on citrus production and conservation, headquartered in Fort Myers, Florida. Company owns 111,000 acres of land in 8 Florida counties, including approximately 90,000 acres of mineral rights. The company classifies its operations into citrus and water resources, with the citrus business accounting for 97% of revenues and effectively all earnings. Okay, so I like this too. Alico has one of the longest, richest, and most dysfunctional histories of any company I know of. So there's a lot in here about it. Basically founded in 1840. Okay, so yeah, you're going to have a rich history if you were founded in 1840. So it goes into all that. The investment thesis is based on the following points. A unique set of assets with substantial value that is largely orphaned in the equity market. Far and away the low-cost producer of Florida citrus. Okay, so that's interesting. Low-cost producer, I like that. Very attractive absolute value with support both from an earnings and NAV perspective. meaningful optionality and long-term growth potential. So, lengthy write-up here if you guys are interested in, the citrus industry. I am not. I think, farming is an incredibly difficult industry to compound money at any significant rate. I'm not going to dig deeper into this one. But if, for any of you who are citrus experts or, like the idea of investing in mineral rights or water resources, could be one to look at. Alico, let's see what it's currently trading at. If it's anywhere close to where this write-up was done. So it's at 31 now. So not too far off. It was 27 a year and 2 months ago. So again, could be one to look at. Next one, we're going to look at, let's take a look at Attento. First I want to look at Pure Cycle Corp, PCYO. Okay, I want to move this down a little bit more. PCYO, Pure Cycle. So, right up from about 5 months ago. Long-term major upside, modest downside. The business has 2 segments, water rights and land to be developed. Okay, that's the business. Segments are independent of one another, yet the land will accelerate water income. Each segment alone justifies the current valuation. Now, again, let's just see where we're at now. Pure Cycle is at $14.35 now, so it's up pretty significantly in the last 5 months, maybe 40% or so. So here we talk about the land, 930 acres in the East Denver metro area. It talks about different phases of land development. Lot sales would be included in non-recurring revenues, public improvements, water and sewer taps. Then we get the recurring revenue. The company will sell water and waste management for the Sky Ranch neighborhood in the future. Pure Cycle says that they will get around $1,500 a year from each of its 5,000 single family entities, whatever that is. That's about $7.5 million a year of water business. That should get a high multiple in the future because it's one of these predictable recurring revenue type streams. Water, oil fracking. Near Pure Cycle's water supply system, there are fracking operations. 16,000 wells used in a single time, and that each well is worth $150K for Pure Cycle. So, that's a lot about Pure Cycle. If you guys are interested, it looks like they don't try to value it, specifically. They essentially are just pointing out here that each segment justifies the current valuation. So looks like there's 2 segments. So potentially half price according to this thesis here. The last one we're going to look at is Attento. Again, CRM services out of Luxembourg. So Attento, what do we got on that one? Been written up a few times in the last handful of years. So the stock has been hammered over the last 5 years due to mediocre operating performance. The pandemic has created an opportunity to purchase the stock with a significant margin of safety. The stock is priced as if the company will not be able to refinance its debt, have no resolution to its PE overhang, and new management cannot improve margins. So, we're betting on a turnaround here, right? We've got some management changes in 2019, drastic overhauls to its management and operational teams, operational improvements, debt refinancing. So, it's a turnaround play, and it's done very well since this write-up. So maybe it's actually turning around. The largest provider of customer relationship management and business process outsourcing services. Whew, that's a mouthful, in Latin America. And one of the top 5 providers worldwide based on revenue. Okay, that's pretty interesting. The only platform to serve large clients across Latin America. We've got the loyal client base here. So Orbitz, Samsung, Motorola, Lenovo, McDonald's, Unilever, Santander. So there's some pretty impressive clients here. There's a lot to digest in here. The global customer management is a mature yet growing market. Well, which one is it? Mature or growing? Market is expected to grow to 102 billion globally and 12 billion in Latin America by 2022. Yet new revenue streams still emerging. So, yeah, this person's clearly pretty bullish on this one. So I will note the, let's see, where do we see? Yeah. We believe at current levels of $1.70 per share or below should provide adequate margin of safety. Okay. I think, this one, the implied equity value per share was around $7. So, when this was written up, this investor thinks this company is worth $7, right? It's trading at $1.42. Now it's trading at 21. Okay, so it's 3 times what this investor thought the intrinsic value was. So it's just gone gangbusters over the last year. So anyway, that's Attento. So yeah, that's all I wanted to cover today. There's nothing really here that I'm planning on digging deeper into. It's mostly out of my wheelhouse. Again, I'm probably going to continue trying to find more information about preferred apartment communities. But I'm not in a hurry. Something that would nudge me further down that road is if there's a VIC write-up that comes out, or I see that there's a guru that decides to buy in to preferred apartment communities. And there's one on here, Topicus, if you guys are interested. There's a great write-up from the 10th Man, his blog. It's a pretty thoughtful write-up on Topicus, if you're interested in that one. And I've shared that in previous episodes. Anyway, guys, thank you for watching. What smart value investors are buying this week. And again, you guys are going to see more content from me around these Nomad partnership letters. It's pretty exciting digging through those. So without further ado, I will see you all in the next video. Take care.